Mish, welcome back to F.A.C.E.
See you, Dale, and everybody. Thank you for having me.
Great to have you, Mish. So what's top of mind for you going into the last month of the year?
Well, right now I've been very busy working on my Market Outlook 2023, and I still very much have the theme of looking for inflation in all the wrong places, which is sort of like a salmon swimming upstream, since everybody, I shouldn't say everybody, but many people, the majority of people think that we've seen the peak in inflation. And I'd say that's probably true in many areas, but there are other areas that I'm watching very carefully, because I don't think that all of the geopolitical situation that we have throughout the world is going to subside. I think we have potential eruptions in different places. And also we still have some real problems with weather and food as we get into 2023. So those are the areas I'm watching as far as what can really be the macro driver of not only potentially driving the precious metals into much higher territories as we get into 2023, but also will probably keep a cap on the market from any kind of major rally. That doesn't mean we can't have these sort of short covering rallies that we've seen, but overall, I still think that we're going more into a stagflation environment for next year. Employment will definitely, I think if anything peaks out, it'll be employment numbers. And that will create maybe some gyrations to the downside, but overall more like a trading range.
Okay. I like the beans.
You like the beans? Yeah,
coming out of here. There's the chart.
Yeah, and USDA, I think they delayed their report, their crop report, from yesterday to today. So that'll be interesting, something to watch.
Okay, I think they all look good. And you're right, the Fed can't print food.
No, they can't print food, and they can't control what happens globally. There may not necessarily be a more war, and it's even possible that the Ukraine-Russia war subsides, or at least gets to the point where it's not as disruptive to global economies. But that doesn't mean we can't see things like coup. I mean, you see there's social unrest in so many different areas. The Middle East has to be watched. And the other underpinning that cannot be discounted is what's happening right now with China, India, Russia, and the Middle East, which is BRICS, which is the goal that they have to try to price petrol in something other than dollars. And that would not be a good scenario for us.
You think they could pull that off?
They've been trying. I know it goes back years, and we've been hearing about it for years, but I've seen more chatter about it lately than I've had in a really long time. And it's possible that they could go ahead and try to really push it forth next year as they test what they consider to be a relatively weak administration. And that's not to get political, but that's to really say that other than throwing money at things, the United States right now doesn't seem like it's going to have an overly aggressive foreign policy stance to try to stop these things. And we know the bottom line is these countries are producers of goods, and these are goods that the whole world relies on. And that's where I think the inflation can come from. So that's what we're bracing for.
Okay. And what might add jet fuel to it is, are you a believer that the dollar is topped, or can we have another shot up and make a new high, or at least a failing rally? Your take on the dollar here, Mish?
Well, last time we talked, Dale, we said that the dollar topped, and it was a very unpopular opinion at the time. And of course, it turned out to be true. But what's interesting is that technically the dollar stopped at some really good support around the 105, 106 level. So getting a pop from there would not surprise me. The question is how big a pop. So we did try to get past up to about 107, I think, recently, and we didn't quite get through there.
Right.
If we get through 107, could we get back up to around 109, 109.50, which is where I thought we really broke down from? Yeah, absolutely. Does that mean we're going to see new highs in the dollar? No, I think there's too much pressure on the dollar. And we're also seeing the flip side of something else we talked about a while ago, which is sort of the modern version of Bretton Woods, when the central banks were buying dollars and selling gold. And now that's flipped, where a lot of countries are starting to buy gold. And of course, with this whole idea of selling dollars, but particularly not buying our treasuries, which also is going to affect our dollar. So right now, things look, I mean, if we just, this is future projection. let's look at right now. Right now, the dollar is actually coming in a little bit lower, which has been a sign of a relief. There's been a lot of chatter about what the Fed is going to do, and the market seems to be getting used to the fact that maybe they're slowing down, even though nobody has actually said that this is a definite monetary policy change. We had German CPI come out a little softer, still high.
Yeah.
You have, but right now, if you look at the charts, forgetting about the dollar and everything, with the TLTs that have been rising because the yields have been falling, the jury's out on whether that's a flight to safety or that's a real shift in the 60-40. And in the meantime, all the key sectors that I like to watch all have held a bottom and look like they could possibly flagging to make another move up into the end of December, which would be seasonally very appropriate.
Can you see my 10-year yield chart?
Yes, I can. Let me put my
All
glasses.
right. I was looking for sharply lower yields, but we're always reassessing, and the pullback seems to be more corrective. And I look at this little falling wedge here, and maybe a bad PCE report or just some other type of news, and I don't think it would take much for us to see new highs. One more new high in yields, I think the market would be off sides on a move like that. Do you think it could happen?
Absolutely. Right now, as I said, well, first of all, I don't think that the target of getting back to 2% or 3% is realistic at all. It's possible at some point next year, we may even see the Fed say they're changing their target from 2% more to like 3 or 4%. And maybe that would give them the wherewithal to relax a little bit. But they know right now that, I mean, just like they thought that the inflation was transitory, right now, they're not going to say that they think inflation has peaked, because they're well aware of the fact that right now there's still a lot of spending. The big thing that people are saying that's going to drive the bonds yields back up and the market potentially down is the whole bond buying, which is stopping, and the whole quantitative tightening, which is continuing. I don't know about that, and I'm not even going to pretend to know about that. But what I do know, just looking from a technical standpoint right now, getting a bounce, we got a bounce in the TLTs to an incredible area, 103.80 right now, or 103.80, 103.90.
I remember I was buying them here and got stopped out, thank God, before they went to 90.
Yeah, exactly. And it looked like they were going to turn there. So not only is that a rally to resistance, but we have a chart, a weekly chart. We put in a 17-week EMA, exponential moving average. Okay. And that has not, the price of the TLTs has not been above the 17-week EMA for over a year, since last October. So if we clear through that, it would be the first time in over a year that the price is above that. And one would have to think that with the given momentum, and unless something really crazy happens at the December meeting with the Fed, maybe we could see a move back up to 110. It's possible, but if we cannot get there, and we start to turn back down, and we get back down, especially under 100, which was sort of like the pivotal resistance from the low 90s, that probably relays to the market that the Fed is not done and the yields are going to continue to rise. But again, be that as it may.
Could we see a new high in the 10-year and the long bond not make a new high, a low?
We can.
That's what I think. That would really be, hello, there's a market message for you if something like that happened, right?
Exactly. Well, that's kind of, I know, I think you talk to Michael Gayed every once in a while. That's kind of been his theory a little bit, and I tend to agree.
He must be watching me.
Well, he's a big bot, he's really into
bond
the
guy.
TLTs. That's his thing.
Yeah.
And he, so he keeps saying the same thing, that the 2 years are not necessarily the most important thing. They can continue to rise, but you have to watch the 10-year. And if they continue to fall, that's going to send a real signal to the market. Initially bullish, because people are going to go, oh, wow, okay, that's great. The Fed looks like they're pivoting, but then the reality will set in. But the bigger thing is, can the Fed, like you say, can they raise like the way Volcker did? And even when Volcker did do what he did, it took another 2 years for inflation to settle down.
Well,
so
he stopped. he stopped and then had to become even more draconian. Do you think the Fed could do that too? They start to see some negative numbers, maybe in employment. I'm not sure if it'll be this one, but they say, okay, we're going to pause for a while. And then the things you talked about earlier in the show do not abate, like food prices, and the dollar is weaker. So if the dollar is weaker, prices just go up nominally, and that the Fed will have to begin tightening again from a higher level in the spring.
It's certainly possible. I think the overriding thing to remember right now is that if they're just watching the normal CPI numbers as they are trending right now, which could come off, there is a statistic that says anytime CPI is over 8%, that it can take anywhere from 6 to 20 years for it to come down and normalize. And that's based on a research project that I just did. It is part of what I'm studying here for my Market Outlook 2023. So if you just take the pearl from that, what it's basically telling you is that if we don't have an overly aggressive Fed, which is probably going to be the case unless there's some major reason why they feel they have to really jack it up. If they just get their Fed funds rate up to what they're saying could peak out at around 5%, again, demand destruction on certain levels that we're seeing, but it's not going to do much to control all of the bubbling that we're seeing around the globe that's happening right here. And I'm not even thinking about China. I mean, China has its own issues, but China is going to be a contributor to inflation because when they come back from COVID, they're huge consumers, as we know. So this to me, I have seen nothing to change my mind about the fact that we could really go into another wave, except that it's not going to look like post-COVID wave, where everything was in short supply and people were gobbling up everything after when they came out from being sequestered. This is going to look more like chaos within the central banks around the world, chaos within the sovereigns in terms of how much money they're spending to try to support their economies, chaos if any kind of geopolitical strife happens, particularly looking at any kind of terrorist attacks or coups, that kind of thing. All of this chaos is what I think we may have to really look at as really the most unsettling part. And then what does the Fed do at that point? If they drive the rates up into that sort of thing, it will take a long time to unravel that type of inflation, number one. And number two is they just drive the economy further into a sinkhole. So I don't really see a lot of confidence coming back in the overall Fed or the economies probably until 2024, 2025.
Okay, so let's get back to where you cut your teeth on the instruments that you traded at COMEX. Are you disappointed in the fact that, I was waiting for the dollar to turn bad to give jet fuel to the precious metals? I felt they really couldn't have a great bull market with a strong dollar, and now we're getting a weaker dollar. But I'm really not impressed with the action in the metals considering the weakness in the dollar. Even today, we were much higher than we are now with the dollar still weaker. Have you noticed that it's really not adding much impetus to the move in the precious metals, the weak dollar to this date?
Yes.
Why is that?
Well, there's a few reasons. One is we did have a lot of selling of gold. And so, as I said, that when that whole period when the dollar was going way up, gold was being sold as a result. But actually, that's one perspective. But if you look at it where the market has been in terms of making these lows that it hadn't seen since pre-COVID, then, and you look at the gold, it hasn't necessarily collapsed as much as one would think. It's still a relative outperformer. So I just think that it's dormant at this point. And I actually have been somewhat encouraged by the action because when we had that massive dip, gap down, and then it closed weaker that day, and then it gapped up the next day and it really hasn't looked back. And it's gone up to about, if we're looking at price per ounce, about 1780 or so. And now it's consolidating within a $40, $50 range here, which tells me that there's no sellers. There's no real sellers. You had some weak longs getting out when they chased that rally. but there's no real sellers like what we have seen on the way down earlier in the year. This is just a consolidation to me. And I actually feel that gold, once it can get through that 1780, 1800, and people start to realize that it is the one real hard asset that they actually can depend on, particularly if the dollar is in trouble, particularly if we start to see some geopolitical underpinnings erupt, I think you can see gold go up a lot. And I'm still bullish, very bullish.
I agree. I just
Okay.
think that it might work lower. And one of the reasons is the gold silver ratio, but I think the gold shares have bottomed. This is my candle of the month here on Newmont. So, right back to major support, key reversal. Only another, day is tomorrow, the last day of November. So that's your monthly candle. And it's at, really flushed everyone out of 40. They were glad they got stopped out at that time, and here we are, 44. So agree with you on the gold shares. I'd really like to see gold sell off hard and see what the shares are made out of, and maybe get something like that, a washout. Do you follow the gold silver ratio at all?
Yes,
Michele?
and actually that's been flashing. I may have softened a bit in the last couple of weeks.
Yeah,
But it's
there it
been
is.
actually, silver's been outperforming the gold, which of course we also know is very bullish for the metals and very inflationary.
Yeah.
Silver's just kind of like, again, it's also gotten back into this sort of range that it's in between 19 and 20, or 1850 and 20.
Yeah.
So I don't see where, I'm not negative at all.
All right.
And I also think that we've had a very interesting situation for the last couple of years, which has been when they look like dreck, you buy them. And when they look really great, you sell them. And that's been a formula that's working even in a bear market. I mean, it almost acts like a bear market in a sense, except a bear market that has constant short covering rallies. That's when that changes, when we start to see buyers coming in on strength, which we started to see like a week or so ago, and then it kind of petered out. That's where I think really going to be your signal that we can look at something that could be a much more sustained and emotional rally in both silver and gold. I haven't really been watching the miners as much. Yes, the classic rule is the miners lead, but in this case, the miners don't necessarily have to lead because we have completely different metrics in terms of everything that's going on in the world.
Okay. I have to ask you about Bitcoin, and hope you changed your plans on being a branch of FTX. Huh?
Well,
how does this stuff still happen, Mish? Come on. How does this stuff still happen?
Well, I as an old commodities trader, the fact if you don't have people watching so carefully in terms of regulations and things like that, these kind of things are ripe to happen. I mean, certainly they've happened before. Even like what happened with the silver market, with the Hunt brothers, it was kind of maybe the best comparison in that they thought that they could corner the market. And obviously they turned out that they were wrong about that. But in terms of, listen, I actually think it's better comparison to the .com bubble in a way where, every coin was hot for a while. And now the reality has set in, and greed obviously has been a huge part of it, greed, corruption, et cetera. So now I'm very patient. We've actually been in Litecoin and made money, which is amazing because we're using a quant model that uses certain metrics algorithms to find the coins that are working better. We haven't touched Bitcoin or Ethereum in a long time. But at the end of all of this, and it'll end, whatever survives will probably be unbelievable to watch and to buy at some point.
Yeah,
right now,
I mean, it's definitely blood on the streets now. And before FTX, they were already calling it a crypto winter. So what's worse than winter? I mean, what do you go to the Arctic, the crypto Arctic?
Exactly.
So it's got, Bitcoin probably, and I know very little about it, but just because there's fraud around an instrument does not mean that the instrument is not valid or won't have a future. You
I
agree with
actually
that?
think it's, I mean, unless there's another meltdown, I actually think it's holding up relatively well,
Yeah.
not to get me to want to buy it right here. But look at what Kathy Wood's doing. And she's been buying GBTC like crazy, buying coin like crazy. Now that she's certainly not become the barometer of what you should do to follow in her footsteps. But I don't think that she's.
Yeah, I turned off my trade copier to Kathy Wood.
Well, I only mention it because it's not that it's totally insane. Obviously, if you have deep pockets and you can afford to sit like that.
Oh, mine are so deep. Deep as the ocean.
Right. Well, I think that this 15,000 to 18,000. If we break down under 15,000, maybe we go down to closer to 10,000. But we can stay like this without any fresh news for a while until there's some reason or people are less afraid to get back in.
Yeah.
I still think that Bitcoin and Ethereum and blockchain technology are going to be hot in a certain point. Do I think it's going to be in 2023? No, I don't. So I think that you have to kind of be a little bit more patient here, and maybe we'll see it start to come back like everything in 2024, 2025. That's kind of like my time frame.
And this is a question, and we'll wrap it with this. Here's a trend line that the whole world is watching in S&Ps, right? They're all watching the downtrend from the all-time high, right? And it comes in about 4,100. What do you think? I think it's vulnerable here, but I think the lows will hold. But when we break out, if we break out, to me it's more when. Do you think that it is a change of trend, or will it just be some type of trap where we break out, we run back to 43, 4,400, and then fail again?
Well, take a look at the same chart going back to the end of 2021 and look what happened. Okay. As we were going into October, November, December, look at that run we had in 2021. Right. And then it just peaked out and died. Right. And so that tells me that at that point, everything was overvalued. Everything was overvalued. Things were just running too rich and not dealing with the reality of what was happening with the Fed, or what the Fed was talking about at that point, which was when they really started to talk about raising the interest rates. So now if you stretch out that chart again a little bit more to me, just so I can see the more recent activity, spread it out a little. Thank you. Yeah, I mean, I think that right now, I would certainly say that if we get any kind of sustained rally, unless economically we can see some real changes here, some real growth. I don't think we've seen any real growth in this economy for a long time. There's certainly attempts to try to make the economy grow through infrastructure and things like that. But if we cannot really achieve those things, and if the Fed is going to continue to have to look at the situations we just talked about, that I don't think any rally in the S&P at this point is sustainable. And I don't think we really even understand what fair value is in a lot of the big cap stocks at this point. Now, that doesn't mean there aren't things that could go counter, of course. What's happened in the Dow has been kind of interesting, outperforming.
Yes,
but that's why I say, right, the generals. What I think you really have to watch here, though, is still, believe it or not, the small caps and the retail sector. I wouldn't be so focused on the S&P, because the small caps and the retail sector, like today we have consumer confidence, I think that's going to be the drivers to tell you what's happening within the United States and whether or not we are beating the rest of the world and continue to do so in spite of everything, because we're being more productive here in the United States. And if that can, and consumers are more confident. And if we can't achieve that, then right now, to me, rallies would be more of an opportunity to take profits if you're underwater and things have come back a little bit, or to look to even go short, or to start looking at other instruments that are outperforming if the market comes down. So that's kind of how I'm looking at it right now. One last thing I want to say is this is coming up. There's a guy I've been following for years. He is a Chinese astrologer, feng shui expert. His name is Raymond Lowe, and he writes predictions based on the elements and also the sign that's coming up for the Chinese New Year, which this year is the year of the rabbit. And it's a water, wood, rabbit. They're very into the elements there. And so what he is saying is that the last time we had this type of setup elements, we've had years of the rabbits because, you know, they cycle every 12 years. But the last time we had the elements exactly the way they look right now was 1963. And I think that is so interesting because in 63, Kennedy was assassinated.
Yeah.
We had the start of underpinnings with the Vietnam War. You know, we had just a lot of different things that were
That's when inflation really began. When did we come off? Bretton Woods was what, another 10 years from then, though, right?
Well, Bretton Woods started in the 60s at around that time. And then obviously that was when Soros made the fortune in going short the British pound. Right. But the other thing to be interesting about the 60s was that there was a lot of, and he's predicting there was a lot of weather issues with earthquakes and fires, and also that there were a lot of air traffic crashes, tons of crashes back then. So I just was looking at this and I'm like, gee, I better look at 1963 a little bit more carefully to see where there might be parallels. But he also said, more importantly, is that when you have such water elements, and I know this may sound a little woo-woo, but he's been very right for years now.
I like woo-woo.
Yeah, well, he's basically saying that until the return, he said the year of the tiger, which we're in right now, tigers carry a seed of fire, which is why we've seen these rallies. But next year, there'll be no fire anywhere. So he thinks that we're going to see a very negative year in the market. And he actually says that very specifically because of the way things are set up. So we'll see.
Okay, well, I just grabbed my rabbit's foot and hope I'm on the right side for 2023. Michele, it's great seeing you. You look great. Nice to talk to you and get your views. And let's just go with best trade for 2023 that you'll be able to hold for a while. Do you think it's gold or silver?
Yeah, I do. I'm going to go with that. That doesn't mean that I won't trade other things. Obviously, you know, I've been relatively active trading for a while, but I do think that gold and silver have, they're percolating and they're like a volcano ready to erupt.
Yeah. Okay. So it just happened in Hawaii. So we'll see. Right. So, Mitch, what's the best way for people to get in touch with you? I know on Twitter it's at Market Minute. How about your website? Do you want to show it? Or just speak it?
I'll just mention it. It's marketgauge.com, and it's a great website because we offer a lot of information there, from everything from market internals, daily blog commentary. You could take a look around. We have 6 or 7 quant models now, and we keep expanding, including a crypto pulse model, which is actually doing well. It either stays in cash or buys something that's setting up. And also we have a blended approach now, which means with all of our models in the discretionary, you know, we have everything from country ETFs to sector models to global macro models to NASDAQ all stars to small cap stars. You know, so what we've basically done is, using quantitative models, we have really made it so that you're blended across everything, which means even if one of the models is not necessarily doing well, and we have caps on everything with stops, others have done very, very well. And I think that's really the direction of where we're going for 2023 in Market Gauge, which is really helping people through this. And also because we have a fintech company now that we're partners with, also being able to automatically trade these things through sort of a robo-advisor type of thing. Not that the robo-advisor makes the decisions for you. You buy into this blended approach and then it trades it for you. Okay.
Well, you know, I believe people should go check it out. Michele covers the whole universe now. And, you know, her work as far as intermarket relationships, one of the best on the planet. So
thank you.
I wish you very happy holidays, you and Keith and your family. and always rooting for you, Michele.
Thank you, Dale, and thank you so much for everybody who's listening. Happy holidays to you all. Hope it's a very healthy and happy one.
My trading warrior sister, Michele Schneider.
Yeah.
Thank you, Mish.
Okay, bye.
Bye-bye. And everyone, you could join the team in 14 minutes on the Morning Edge. See everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. I'll see you later on. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.